Hey everybody, nothing to hide, nothing to hide. Yeah. All right, so let's get the day started here. Up to 60. My starting value is wrong here. Change that. Let's see, what did I start at today? Nine. $383. All right. All right. That's what we started at today. 9,383. All right. I've still got my SPY puts. 3 February 10th expiration, 393 strike puts, and then I've got 1 February 10th 400 put. Sort of an interesting open today. A bunch of stocks on the New York Stock Exchange were halted. Right at the open. Halted, boom. Large price moves. It's probably nothing. They say it's a technical issue, something about the order flow and the book and blah, blah, blah. We'll never know what really happened. But long story short, it's probably nothing. There were some big price jumps at the open, which who knows why it happened. Might be software, might be a hedge fund whose algorithms got misprogrammed, you know. Who knows? Something went wacky. But in the end, they're probably going to just cancel those trades and like they never existed. I guess fair enough. All right, so we're up 256 today, right now. Let me see something here. Comma in there, yeah. All right, SPY is down 1.5, 1.71. That's what we're in right now. How do I feel about today? Well, boy, I really do feel like we're at something of an inflection point. You've got the Fed meeting next week on Wednesday. We know he's going to raise it quarter point at the Fed meeting. Yeah. And he's going to talk hawkish. And I think the market has to go down in anticipation of Jerome being hawkish. He's going to talk hawkish on Wednesday. We have to go down in anticipation of that. I'm really debating whether look, the market has been in a bear market for a year now. Let's see here. Yeah. This was COVID, all of this, COVID, COVID. This is the last year down as the Fed has tightened. I mean, you could draw a trend line. Let's do it. All right. This would be a trend line for before the last few days. But we can, increase the angle of the trend line a little, like that. We are right at that trend line. So, yeah, that's a big reason why I've gotten short here. We are at that trend line. And if we break above it significantly, especially right before a Fed meeting, a week before a Fed meeting, we're going to break above that trend line. That would signal to me that we might be entering a bull market. A long-term bull market, which is possible. It's possible. I don't think that could happen quite yet. I really don't. But this is how I always feel when the market switches direction. Like up here at the top, I felt the same way there. I felt like, oh yeah, we're in a bull market. The Fed is starting to sort of tighten a little bit. Maybe we're going to enter a bear market, but not yet. There's so much money still out there. We're not entering a bear market yet. It's still a bull market. And of course, we were entering a bear market. It took me a couple of months to actually catch on to it. That is the feeling I have right now. That, we're getting close to maybe being in a bull market, but the Fed's still tightening. We're still in a bear market. Yeah, we're still in a bear market. Boy, dangerous for me to be trading here, honestly. Either way. Because I'm betting on us still being in a bear market, because the Fed is still tightening. But I don't know. More and more, I think, boy, we might be entering a bull market here. If the Fed is really slowing down and earnings come in strong, we could be in for a soft landing. Yeah. Inflation looks like it might be getting under control. And if earnings come in good, we'll have inflation decreasing with an economy that looks okay. Could we be entering a bull market here? But we can't be, right? The Fed is tightening. Interest rates are at 5%. And Powell is going to come out on Wednesday and say, all right, we're raising them another 1/4 point, and we're not lowering them anytime soon. We're going to keep being restrictive on monetary policy for a while, for a long time, is what he's going to say. Boy, oh boy, you could make an argument that it's time to get back into this market. You really could. You could make an argument that it's time to get back into this market. On the long side. But there were those technical issues this morning. There's a lot of volatility out there right now. VIX is up. Volatility gauge. I mean, this feels like a risk-off day. It feels like a risk-off day. My gut, my gut is telling me that it's not a risk-off day, that there's going to be buying today. And if there's buying today, God, I got to exit all these positions if there's buying today. I really do. I have to get out of any short positions here. I should just do it right now. Oh, I'm so tempted. I'm so tempted to just exit all of my positions. Oh, I'm really debating it. One thing I should not be doing is watching this market tick by tick like I'm doing right now. Minute by minute. I mean, it's all just noise, and I'm watching it like it means something. It's a good way to make a mistake. But if we go green today, oh God, if we go green today, and my gut is telling me we are going to go green today. If we go green today, alright, whatever. I have to stop watching this. I can't watch tick by tick. I'm gonna make a mistake. I'm gonna do something stupid. I'm gonna overtrade. Don't wanna overtrade. I will come back later. I'm gonna step away from it. Come back when I'm feeling less emotionally invested in every cent the market moves. Alright? Sometimes it's good to step away and say, hey, you know what? I'm putting myself in a position to overtrade. Take a break. Alright? Nothing to hide. Thanks all.